Last year, as we heard really from the Brighter team, so not just last year, I think the Brighter team data was that over the last 10 years, 7 billion has come into Nigeria, right? And from the data we've seen, if you look just at equity, Nigeria has really been the top startup destination for investments into the continent. So you've seen Nigeria's tech ecosystem from many angles, as a minister, now with TLcom Capital as an investor, also from the telecom side as, the director from MTN rather. So I just want to ask you to paint a picture for us, in your perspective, why is Nigeria so attractive as an investment destination?
I think, thank you very much, Emeka, and it really is a pleasure to be here. I've also got my own story about Citibank. This square here used to be my office. When I was country manager director of Accenture, the second floor was our office. So I'm sitting right in my office almost 12, 15 years ago. Yeah, why is Nigeria such a compelling story? I think, Fumi mentioned it. I think, first of all, it's a market that you can't ignore. There are 250 million people. It's a market. It's a country of entrepreneurs. We're hustlers, but beyond hustlers, I think that there are a number of things that are also going for Nigeria. We are building some fairly significant digital infrastructure. If that infrastructure is not there, the tech startups cannot thrive. So when you look at the number of consumers that we have, the number of consumers that we have 5G. There are data centers that have been built in Nigeria now to support, all the things that the tech startups are doing. So there's some seriousness and some real money going into digital infrastructure. I think the other thing that, and I've also talked about the market of Nigeria. I think something that has happened over the last 10 years, it's still very early, but the slide that the young lady from Brighter British showed is that we're seeing some seeds of exit. So they're seeing, particularly the fintech is the one that has taken the most dominance, and that's because the value proposition is very compelling. We have a number of millions, tens of millions of Nigerians that are underserved as far as payments, lending, whatever it is concerned. So it's a huge, huge market. And so what we're seeing is that, yes, a lot of money is concentrated there, and for good reason, because the potential is very compelling. But what we've also seen is that we've had Nigerian companies that have started off very small, but have been able to build fairly significant businesses. And while there have been no IPOs, in the fintech, and that's very important. There've been no IPOs, so no exits the way that we like to think about exits, but there have been exits for some of the smaller investors. So if you invest in Flutterwave or Paystack when there were smaller companies, you did very well. So that is also beginning to create this notion that you can invest in companies, in tech startups in Nigeria, and you can get good exits. Still early days, but I think very important as evidence for Nigeria as a good destination for venture capital.
No, that's fantastic. And I just wanted to, I guess, prod you for, you talk about there haven't been many IPOs, but within TLcom's portfolio, there's a lot of interesting companies, right? So fintech and outside of fintech, I think Andela, Fair Money, Zone. So if you think about, to make that concrete within your portfolio with the caveat that's no exit, so it's still, on paper, just when you think about your portfolio, what is a success story you point to?
So we have two funds, and I should say that we have about $220 billion under assets under management, two funds, Tide 1 and Tide 2. Of course, the big success story is Andela. We have a unicorn in our portfolio. We're this close to an IPO, but I guess the market turned. So that's one of the key successes that we mentioned. But having said that, and Andela is not a fintech. We're very proud of that. But we also have some. You mentioned a couple. Fair Money, which it's a fintech, it's a lending fintech, also doing very, very well, 1.6 million consumers lending between, 50K to 100K to people that have no access to this money. I think the other one to talk about is, again, the non-fintechs. There's Pula, which is it's an insurtech. What it's actually doing is investing, it's helping large insurance companies to insure small-scale farmers across Africa. So imagine there are hundreds of millions of small-scale farmers. There are 20 million or so in Nigeria alone. They're farming small plots of land, and basically they cannot afford insurance. And climate change, floods, pests, whatever it is, their harvest gets wiped out in a year. And what Pula is doing is actually building that tech infrastructure to enable big insurance companies to insure these small-scale farmers. So again, Pula has done very well. They just raised their Series B, $20 million late last year. Doing very well. ULesson, I have to mention, the last one I'm going to talk about. ULesson is, many of you know Sim Shagaya of Conga, of Deal Day. SIM is building, one of the largest edutechs in the continent. Started off with a U-Lesson, which was complementing secondary school and primary education, but also now moved into tertiary education, building actually today the largest online university in Nigeria. So a lot of companies, but like I said, none of them has exited. And what we're really focused on now, our fund is almost 12 years old. We're really focusing on working with them to get to that exit. Fantastic.
Fun fact, when I first came back to Nigeria a decade ago, SIM was who hired me. So I actually worked at Conga, this is 2015. But speaking of exits, I want to come to you, Mr. Bukar.
Yes.
All right. Fantastic. So I was reading your background. Very interesting to me. You were, in your, storied career, one of the people that first brought Visa cards to Nigeria. And now as CEO of Inlaks, you really, have a lot of the central banks, as clients of the firm, including the Nigerian central banks and a lot of Nigerian institutions. So you have the corporate side tied up, but I want to go to that exit. One of the things that was really interesting to me on your background was you were one of the early investors in Paystack, right?
Yes,
so
yes.
I think to Omobola's point, is, some people did very well, right?
Yes.
So I'm
Yes.
very curious from, from your perspective, just why should more Nigerian institutional and individual investors actually invest or pay more attention to Nigeria's tech sector? When there's real estate, there's, bonds, there's other opportunities for your capital.
Interesting you would ask that question. But before that, I need to go back to history again. Citibank connection, right? When I retired, both Citi and Stanchart asked me to join the board. So the politics behind me joining one of the boards was that somebody knew that my father in 1950 worked for Standard Bank, which turned out to be First Bank, which was then Stanchart. So that dinner sealed the deal, even though I turned down YC, which might be a career mistake. But interestingly, in 2012, after Omobola called me, and I was in a meeting, I think I stepped out to take the call, and she said, "This is what we want to do. I want you to chair the event." I don't know if you recollect. And we had our weekends in this building for the next 2 years, going through startups. And I think that's the foundation of the tech startup ecosystem, really. All other things follow thereafter. So I want to thank Omobola for that foresight. Initially, my belief was that people are after real estate returns, et cetera, et cetera. And when we started, it was very difficult to get $10,000 from a high net worth individual, because what they want to see is an outcome that is short term, 90 days, 180 days, rather than say 8 + 1 + 1, right? But that dynamic had changed. And I became chairman of Ventures Platform 2015. And our first set of 10 or 11 investments, 6 of them went down to 0. Out of the 4 were 1, Paystack, which was acquired 3 years later at 14.7 MOIC, X our investment. But the interesting story was a partial exit of Thrive Agri, its agri-tech company. And that was at 125X, partial exit. Unrealized gain of 400 MOIC. So these stories are never told. And these sorts of investments are still in the market. Some are burgeoning, some are still at the initial foundational level. I mean, I've turned down some investments as angel investor that I would regret to my grave. They did fantastically well since then. So the game is that you need to actually listen to the founders, and they also need guidance. You know, when I saw the presentation, there is all the talk about access to finance. In some instances, what we discovered is that there is a need for entrepreneurs to know how to run a business. Just because you've worked in a large setup doesn't mean you have the right skills to run a business. And in some instances, we had to actually ask the CEO to step aside for 9 months, still stay in the board, see what's going on. They come back more humbled. I mean, Y Combinator makes the heads of entrepreneurs go big very quickly. And within a 3 or 4 months period, they come back and they start working as if they can walk on water. And then you have to bring them down to the realities. Things that happen in the US will not easily happen in Nigeria. You have to do everything yourself. And because of that, there has to be a resilience in your DNA as a startup founder or a part of the journey. And the journey in resilience, just as Oguche mentioned about the encounter at the airport and thereabouts, is basically where the belief is not just in the numbers and the macro and et cetera, et cetera. The belief has to be in the founders and the people that are behind the ideas. So that basically gives you the flavor of how things are going with us in Ventures platform. By the way, I have left Inlaks. Well, I'm still a board member, but I've left the day-to-day.
Oh, fantastic.
Yeah.
So I like the transition you made because you just blamed the U.S. and Mr. LeBlanc for the issues we have in the startup ecosystem here, right? So I just wanted to come to you next, Mr. LeBlanc, and ask, so obviously Nigeria is one of the top investors in terms of FDI. America is one of the top investors in terms of FDI in Nigeria. So I just want to ask you, just what's the U.S. government view on Nigeria as a strategic investment destination, especially relative to startups on the startup ecosystem?
So thank you for the question. I'll start by saying that's not how I heard what he said. And just let me start actually with two things. One, it's a huge thank you to the ABC, to Citibank, to my fellow panelists with an acknowledgement for the Honorable Former Minister. And the second, I just want to tell a story. So I actually arrived in Nigeria October 2023. I had never been to Nigeria previously. I'd lived 5 years on the Francophone side of the continent. And my first work day was the reception everybody was talking about that started this investment. And I remember I arrived, I went to the reception, there was this energy, there were companies, I met what felt like 5,000 people. And I thought I made the right decision. Because again, I had never been to Nigeria before, and I just thought, this is incredible. And so that was the start of this journey. And walking in this morning and realizing this is almost 2 years on, this is really fantastic. So thank you. To answer the question, I will say, so I represent the US Department of Commerce. This is our version of the Ministry of Trade and Investment. And we made a strategic decision last year to pick 4 countries on the continent with whom we have created these bilateral strategic MOUs. So the idea is to increase trade and investment between Nigeria and the US. So to bring more trade and investment here and to bring more trade and investment back to the US. As I said, only 4 countries. We looked at all of the countries on the continent. And it's exactly because of 2 things. And I think it was Funmi who said it, potential and opportunity, right? So potential is tomorrow, opportunity is today. And that's what we looked at. And what this MOU does is it's not for us to say what should happen. It's for you to say what should happen. And so we created these mechanisms. We went out and are going out to the private sector. We launched last month with, thank you, support of the ABC. And we created working groups, the acting CG said, so it's ag, infrastructure, and the digital economy. And we created working groups, equal parts Nigerian and US companies, to tell us, both our government and the Nigerian government, what can we do to get out of your way? What can we do to bring in more, unlock more investment? What can we do to bring more trade here? Are there barriers that are trade related? Are there non-tariff barriers? How can we build this thing together? And so we've just started that. And I will say again, so the working groups are only private sector, and we've specifically reached out to all voices. So we have the big companies, but we also have startups, because we understand that to really understand the opportunities and to really make a difference, we need to hear from everybody. So we do have in every single working group at least 2 or 3 startups, from the smallest to also, we have Pan Atlantic University, the Entrepreneurial Development Center, so they represent, I think, 2 million startups. So we really wanted that voice because it's crucial for us. And again, this speaks to opportunity and potential, right? We're looking at today and tomorrow, and of course, startups are going to be the bigger companies further down the line. But the short answer is, we're very excited. We see lots of opportunity and potential, and this is a strategic market for us. And really, the work has just begun.
Fantastic. I really like that framing around the potential tomorrow and the opportunity today. And I think, it speaks to, or just indicates some of the ambition some of the entrepreneurs in this room and outside have. And in terms of ambition, one thing that really spoke to me about this panel is the ambition that you have, Mr. Fauzan, you and Conduit Group, right? So there's an initiative that you're leading, I believe, called the 10 in 5 agenda, where you're aiming to catalyze 10 billion in investments in 10 sectors across Africa, over 5 years. So, now we're kind of transitioning at this point in the panel. We have a sense of the Africa opportunity, and I want to now move to the second part of the subject, which is the local capital. So the question I have for you with this 10 in 5 agenda is, will local capital from, again, individual investors, institutional capital, will that be important in achieving this 10 in 5 agenda? And if so, how so?
Thank you so much. I don't think that the entire goal of the 10 in 5 can actually be achieved without the local capital. Partially because one of the biggest issues that we had, so a lot of our financiers are from the US predominantly, because Conduit is originally US owned. My partner is an American lady. And then the Middle East, that's pretty much it. Some few parts of Asia. But you find that one of the biggest questions we had, and this question is not just limited to the Conduit Group. As a matter of fact, it's one of the reasons why the Conduit Group was founded in the first place, always is, why just my money, right? I worked at DMA Capital, and I was part of the people behind the results are not very glorious, but the 9 Mobile acquisition, Keystone Bank, and a few others. And you find that we did Bachita Sugar over in Kwara State, and you find that there is this trail of the same mistakes being made, right? But the people with the money, the people holding the bag in the US and the Middle East, are seeing these mistakes. They may not be very obvious to the people on the ground. So the people on the ground, it may look like, 9 Mobile didn't work out, yeah. But to the person who forked out the money, they're like, why did you allow this to happen? And then the result to that always is, why is it my money? Why is it all my money that's being risked, right? We recently had something we wanted to do with British Petroleum to sort of alleviate the issue of the dollar versus gasoline products, to sort of reduce that FX weight of over $1 billion every month. And we had the financier secured, we had BP secured as the cargo supplier, we had all the traders secured, we had 2 banks secured, and then the question after that, I kid you not, was, wait, why is our money the only skin in the game? What's going on? And we're like, well, BP, at the end, do you ever explain something to somebody, then you realize you're speaking too much English? Yeah. Like halfway, you're like, wait, I may be BSing a little bit here because the man has a point, right? So that local capital then becomes very, very, very critical. And one thing that my senior over there sort of pioneered directly or indirectly is a lot of the holders of local capital are beginning to look less at legacy wealth and more legacy vision. So it's no longer, I'm keeping the money that I have to sort of maintain the wealth or maybe grow it a little bit, put it in some land, buy some Euro bonds, and keep it safe. Tomorrow, wait, how much did Paystack exit for? How much is Flutterwave today? How much is in there? Wait, I think I want to be part of the future. I think I want to invest a bit into the future. So some local capital is really beginning to look at that. Of course, there's some entire systems that need to change to make that possible. I believe we need to layer and separate the legacy owners, the people that made the money and the people that are going to figure out how to grow it in the future. I think we need to there's some work that needs to be done in that regard. But the local capital is beginning to view that future as possible for their money. And what we're doing with the 10 in 5 on a lot of things is we'll say, okay, here's some money from the Al Maktoum family office, who are our partners. They'll bring $100 million. We have a local partner that's bringing $50 million, and Conduit is helping manage the deal. That way, Al Maktoum doesn't feel like they're taking on the entire risk because they're not here. This is a country that doesn't speak Arabic. There's a lot of cultural, demographic differences that they don't understand. And those differences and the inability to arbitrage them is the reason a lot of big transactions didn't work out in the past. They're some of the biggest mistakes in investment that used to happen. So we are very, very keen on sort of bringing as many. As I'm speaking right now, under our umbrella, we have a fintech that we own, and I'm purely looking for local financing for it. Purely. I don't want any foreign money. I was like, no, this, if I can find somebody to just fund this locally, that's what I'm looking for. Because once you validate that the people on ground care about this as much and they're willing to put their money there, then the people out there will also be encouraged to do the same, right? I can't invite you to eat food in my house that I'm not trying to eat. It's terrifying to you. Why? You know, why should you? So yes, short answer, forgive me, I can ramble on for forever. But short answer, we do have consideration for local capital. We are actively hunting for local. If you have rich people, please introduce them to me. And we are trying to see that we can catalyze and bring it all under the 10 in 5 agenda. Thank you so much.
Fantastic. Mr. Bukar, it seemed like you wanted to.
Yes, I believe very strongly that local capital is more catalytic than anything else. Of course, my first layer of catalytic capital ought to come from government. Unfortunately, it hasn't happened the way Chile did theirs. Chile's startup, I don't know if anybody knows of the case study, which is what is replicated in Malaysia, UAE, and the rest. It's actually Startup Chile that started with $5 million for startups, both foreign as well as domestic. And what they did was, because they knew they were a small country, they attracted outside brains to come in, give them easier access for residency, et cetera, and then they started spitting out unicorns over time. I made that recommendation to government. Even to this, if Taiwo Oyedele is around, it would have been much easier conversation because I chaired one of the subcommittees of the tax reform, and one of them was on fiscal competitiveness and economic development, which is not part of tax conversation, but it's once you layer certain things with incentives, it becomes no-brainer for even the large high net worth individuals, family offices, which are few and far between in Nigeria, to be the catalytic, high risk, early stage investors in deals. And then the foreign money follows because they realize that this is where things are happening. And these are huge opportunistic investments that probably are fading away globally. But Africa is where the game is going to be played for the next 30 to 50 years, honestly. Because, you know, the newer things, AI, all of that, I know that our people are still on the user side of AI, but we need to also be in the developmental component. My background being in tech, and I cut my teeth in Silicon Valley with HP for 13 years before I came back to the country. So that culture is still inside me, roaring to, you know, break out, so to speak. And some of the things that had happened in the ecosystem actually validates those theses. So essentially, local capital follows foreign capital. I mean, it's a no-brainer, really. Thank you.
So what I also hear you say is there's a good side to the U.S. culture as well. Right? So just to add that. But one thing you mentioned, right, was you talked about high net worth individuals, and you talked about family office, that they're few locally. But you didn't mention pension funds, right?
Pension funds are actually, I told Ogucha that we'll have to have a conversation. The thing about the pension funds is that In a high interest environment, T-bills high, you become a couch chief investment officer, literally, because you take all these funds, you put it in, you're getting 20%, no sweat. Now, the thing is that, can we segment the clients into early stage, meaning that they still have 30 years before they retire, or 40 years. Now, can those funds then have a higher proportion going into VC, even as LPs? They don't have to create their own funds, if so to speak. There are many in the country where you can actually, give them the money and enjoy the ride, because at the end of the day, some of the what do you call it? The rankings of PFAs. When you segment them into the longer term and the shorter term, you find that the ones that, like for somebody who has retired like me, they better put it in fixed income so that I can see my money every month, versus someone who just started a career. They should actually make higher risks. Maybe 5%, maybe 10% of that fund should go into that. So the asset allocation formula at the regulatory level should make it such that the pension funds in Nigeria can at least be a catalyst for building Africa. Not just Nigeria alone, because the opportunities are everywhere. When we started in Ventures platform, we initially wanted to be a tech accelerator. We quickly realized that the gestation period is so long. So we pivoted and became a fund. Our first fund, we failed abysmally in raising, I don't remember what it was, $10 million or something. We couldn't. So amongst ourselves, rather than call it a fund, we call it Syndicate One. And that was where the stock money was. That was what, in fact, we had invested in MoneyPoint, PiggyVest, name them, but they were small bits of money at the very early stage. And then our thesis was that we will be an early stage VC. So we are pre-seed, seed VC, and it had actually worked for us. High risk, high reward. And then initially, when we announced our first large fund, 2 entities from outside of the country wanted to actually put 50% and be part of the GP. We had a serious board meeting, serious discussion. We said no. We turned down money that would have actually made us close sooner. But at the end of the day, it was the right decision. So the local capital is very important. The funds, such as pension funds, are actually the building block. They could do it in 2-3 different manners. One would be in, don't go into the project-related investments. Come in after the projects have been completed and be the cash flow engine.
I don't mean to cut you off, but I want to come to that point and ask Dr. Omobola to chime in. Correct me if I'm wrong, but I think according to the research I've seen, pension funds have something like 24 trillion naira in assets in Nigeria. So you talked about, 5-10%, but even 1% of that, is funding 30, 50 flood waves, right? And then, so I want to start some drama, Dr. Johnson, right? So the good CEO had mentioned VCs using a spray and pray approach. So I wanted to get your feedback. Is that how you see? I mean, sure, there's the VC model. I think Dr. Barker talked about 6? 4 startups failed, right? So in the VC model, the power law, the general model is most startups will fail, right? So the question I have for you is just how do you respond, on the one hand, how do you respond to the view that that's kind of a spray and pray approach? And the second question is, well, I'll let you answer that, then I'll come back.
Yeah, I also heard that and I cringed when he said that. I mean, it's true. It's the power law model. It's 1 in 100. But I think it's not really a spray and pray model, because basically we do look at those companies and we don't only pray, we actually assess them very well. But one thing to realize is that you're investing in companies that are very early. They're innovating. So what it's high risk. So there's a very high chance they could fail. There's also a chance they could succeed. So to your question, it's not so much spray and pray. It really is a VC model. It's the fact that you look at thousands of companies over a period of time, you invest in maybe 1% of them, and you hope that 1% of that 1% is going to be the one that returns the fund. That's the model of VC, and that's really why it's a bit of a challenge to try and explain that to the more sort of traditional pension funds. But I think the point to make is that because there are two things about venture funds. Number one, it's risky. So if you're not willing to bet everything and potentially lose it, please don't do it. Number two, it's also fairly liquid. And so these are 10-year funds, 12-year funds. You can't just come and say, oh, I want my money back. Sorry, you can't, because it's investing in companies. So it's fairly liquid. But I think the point about it that Bukar was trying to make is that, yes, they're high risk. Yes, they're liquid. But in terms of the returns that you can make on that money, it's significant. And number two, in terms of the impact of that money, it's also significant. I want you to imagine where we would be today without the flutterwaves and the money points of this world. In terms, it's so easy. Even with government payments, I can't remember the time I paid any government bill and took cash. I can't remember. Maybe I live in Lagos, that's fine. But even federal taxes, everything is done online, and this has been fueled by some of these tech companies. And I think the thing to mention also is that it's 24 trillion. I think there's a small allocation now to VC. Maybe it's PE, but I think to PE. PE is, again, high up the food chain. It's less risky, but we're still making the case for VC. And the case of VC is not, please don't come and invest the 50K or the 100K, because that's high risk. Chances are you're going to lose all that money. You need to invest in the companies that have been significantly de-risked. So when I'm talking about a fair money raised in the Series B, this is a microfinance bank, $100 million of revenue, profitable, Nigeria, Ghana, Zambia. These are companies that you can invest in. So I think the case to be made to pension funds is that VC is not, when you think about VC, you think about, startups. Every time you think about a startup, you think about some young boy that's, just playing around with this money. But the thing about it is that it's a very large spectrum. Ventures Platform is a pre-seed and seed fund. TLcom Capital is a seed and early stage fund. There are bigger funds that do the Series B, Series C. So there's a range. And I think the narrative to the pension funds has got to be, why don't we get your money into the companies that are being de-risked and that can allow them to grow?
Fantastic. The second question I had for you, I'll just add a tiny bit of context first and before asking it, is that, the IFC's latest report, according to IFC, I think in May, 80% of the, funding that goes into African startups comes from abroad, right? So there's this big gap, and that's the highest of any emerging market, right? So there's this big gap. We talk about local capital as being catalytic. We talk about, the need for it and how it could, the impact it could have. But so the question I have is, what do you say to people who say that local capital just isn't ready for VC as an asset class?
I mean, I think it's the same argument around local capital. Because this is illiquid and it's high risk, there's got to be a bit more storytelling, confidence building for local capital. One thing I wanted to say, and it's good that, well, you're still here, but the US ambassadors go. But the thing about it is that I think it's actually the other way around. The international capital is a catalytic capital. When you look at the 80% of the money that's coming that is not local, it's actually coming from European DFIs. It's coming from the BIIs, the IFC, FMO. These are all, it's government money coming from these development finance institutions. They have a mandate to be catalytic in Africa. So for instance, our two funds, our first fund was 90% DFI, second fund is probably 95%, second fund is about 80% DFI. So they're the ones that are bringing in the money. Now, for the local capital, I think there are two things that local capital can do. It's an emerging asset for many of us in this side of the world. So we're still trying to understand venture capital. I mean, I know, for instance, when I'm talking to some of my friends and colleagues, and there's a big, I mean, it's out there. Kobo was one of the companies that failed. It's in our portfolio. They raised $20 million. And somebody says, that's just crazy. $20 million down the drain, literally. And so that understanding that, yes, it's $20 million down the drain, but for every Kobo that fails, there is a pooler, there's a U lesson that's going to succeed, and we make up for that. So you invest in a fund and not just a company. So I think there's a lot of that sort of narrative, building the confidence of local investors to actually participate in the industry. I think the second thing to say is around debt. So this is mostly around, and I think lady from Brighter Bridges, you made that, so I forgot your name. She made that, Mariam, she made that point. There's a role for equity, but there's also a role for debt. And we're not seeing enough of that. And the debt can come from many instances. So you gave the example of Thrive Agri, which was actually debt, crowding debt funding from local investors. I think that's a great story. Traditional banks can participate. Actually, we see many of the companies today that are leveraging banks' balance sheet. Again, that's one of our portfolio companies, AutoCheck, that is actually lending money to people that want to buy cars. It's the most difficult thing. If you want to buy a car, you go to a Nigerian bank, it's almost impossible because they're just not going to, they will, but trying to finance a moving asset that can just disappear. But what AutoCheck has done is created the tech infrastructure that allows you to assess a car, say this car is good enough for you to buy. It does all the credit checks on the individual, and it then says to their partners, who are, one of them is Access Bank, First Bank, here's a credible consumer that you can finance. We've done all the checks and everything. Let me use your balance sheet to lend money to this person. So that's the way that we can get more local capital. It's not only equity. There's actually a role for venture debt in this as well. Local currency venture debt.
That's fantastic. I wish I had more time because I'd love to dive into, you talk about Kobo, but Kobo I think is a bit of an old story, but the new story with TLcom that people are talking about is Okra, right? Lots, I think a different scale, 16 million, but I think there's still that perception, what did these guys do with the 60 million if I had a fraction of that?
16.
16. Right. So I think that's what people, that's a conversation today. And I think there's a role for sure for narrative and storytelling and perception that, it's a high risk asset and, and these things happen. It's a flip side of that 125x MOIC, right? More, right? So these things happen. But the other thing you talked about was the hybrid.
If I can just say, there's something also around this high risk, particularly when you talk about fintechs. These are, and yes, Okra was another portfolio company that, in a sense, a little bit different from Kobo in the sense that we actually decided with the founder to wind the company down, and the capital, some of the capital was actually returned to the investors because they didn't spend all of that $16 million. I think there's also a part where I think later, maybe if we have time, we're going to talk about the role of government. I think regulation is important, and when we shy away from highly regulated companies that are being founded in highly regulated industries because it's tough. We know that the regulation in this side of the world can be actually quite difficult, and it's one of the reasons why Okra probably didn't do as well as they could have done. It was open banking. The regulation came much later. Halfway down the line, government decided that they were going to do what Okra was doing, and they did it at a fraction of the cost. And so, they just pulled the rug from under their feet. So, not making excuses. Some of these companies will fail, and it did. And the story is out there. But the point to make is that these are high-risk investments. When you go into regulated industries in Africa, they are higher risk investments. Even the fluctuates money points of this world, they've had their challenges with the regulator. And but I think they're big enough now that the regulator can pay attention, can listen to them, and begin to formulate policies that will actually support the growth of fintech. I think that's really, really important. But they have to be big enough. For the ones that are small and are innovating around things that are happening, they're still small, they're still sort of under the radar. It can be very, very difficult. And when we talk about, the role of government, this is something that governments need to be aware of and need to start doing as well.
And if I may buttress something, I think we have a huge task of really doing global image positioning for startups in Africa, both the successes and the failures.
Correct.
We don't do postmortems for startups that fail. And so to everybody that's not in this room, as far as they're concerned, Okra just chopped money. And if you go on social media, they're like, oh, they bought a Range Rover, they bought this thing, they did that thing. And there's going to be all these stories. But nobody's actually doing the postmortem to put a spotlight on why did this fail. Because if people understand a lot more why something failed, they'll be more willing to take a risk on something else that doesn't have the same properties as this thing that failed, right? So our ugliest trumpets are louder than the most beautiful ones. The scammers are too loud, the losses are too loud, and we don't do proper postmortems to these things. But until we do, a lot of sort of confidence will continue to die, because it's this black box where we don't really know what's inside. So if something fails, I think, and this goes to esteemed financiers like yourselves that have this huge portfolios, is I think there needs to be a budget for marketing the failures, right? Like put money aside to do postmortems, to do PR runs, to actually let people know why this did not work out. Because that not only inspires confidence in your firm, it also inspires sort of other financiers to know, okay, so the next startup I'm funding, let me not look at it as, oh, fintech, I'm not touching it because Okra failed, but okay, fintech, I'm touching it because it doesn't have the reasons Okra failed, but I'm touching it anyways, right? So I think we need to do more global image positioning and marketing for both the successes and the failures. I just thought I should add that on top.
Just a quick chiming in here as well. I think this story is that the narrative is not coming from us, meaning the members of the ecosystem. And if it is coming from us and we explain it clearly, it becomes easier for potential investors and even the consumers to appreciate what goes into making a decision like Omobola might make to put in 10, 15, 20 million dollars into a startup, because it's not an easy thing. You go through 400 entities before you make one or two investments. Now, that actually addresses the spray and pray concept. In even our own early stage, we have tools that we use in screening. And there were two entities in the early part of our life, maybe 20 or 40 investments thereabouts. There were two entities that failed our checklist, and we still waived. It's not something that an investment committee ought to be doing. And the reason is that it was quite sexy to be part of that journey. And guess what? They actually failed first. Now the thing is that, yeah, if you have your tools, use that and stay to your rules. Don't cut corners. But then the second thing is what you have mentioned, which is that we have to tell our story, even for the failures, because we have case studies that is rich. If you go and look at TLcom or Ventures platform, even the postmortems we do, we're still guarding it because you feel like it's something proprietary. But at the end of the day, when it is the entire ecosystem, it becomes easier to actually discuss an entity that has failed and failed openly, but with dignity. I mean, I think Okra case is a case where, yeah, if there is a failure, fail early, and you know the dynamics of what changed, because Okra was trying to build rails. Building rails is capital intensive, takes a long time. In the payment space, ValueCard and InterSwitch were the rail builders. And today they have managed to pivot to become something completely different from where they were. I mean, we were the first to actually start having ATMs work with other people's cards, you know, other banks' cards. I mean, those were the early days. We were doing funny things to keep things up 24/7. I remember going to MTN office to ask for data for GPRS, for our POS terminals. They kicked me out of the room. They said, voice is the future. Guess what it is? This was 2004, people. I did an experiment with NYSC guys all over Lagos, sending data every five minutes for 2 weeks to test the telco's data capacity. And when I went into one telco's CTO, and I said, I have a data that's this. He said, can he have it? I said, how much are you willing to pay? So some things were very basic then, but it means a lot. And because of the, We're running on voice channels, sending data through voice channels, and data has to be small because voice communication is 8 bits per second. So when you're listening to me, you're listening at 8 bits per second. But I want to shove as much data as possible. And that doesn't happen at that stage. So we had to craft and design a POS terminal for Nigeria only that was built for me in South Korea. We were using 2 batteries, 2 SIM cards, et cetera, et cetera. But those stories are now gone because the infrastructure improved. When you're building infrastructure, there is a chance that you might actually get buried in the middle of the forest, you know? But that's another story, you know. So some of the narrative, we have to own it and actually be the ones to deliver. And so this is why ABC happened.
I know we're taking this away from you, but I just want to make one. It's a very important point, and you know, it's important to balance the narrative about failures and successes and the VC model. We expect, as fund managers, as VC investors, we expect that half the portfolio will fail. And I think that that is a narrative that must be out there very clear, because that's the model. For the ones that fail, when you make too much noise around the analysis, why they fail, blah, 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 you're going against the model itself. You know, Okra and Mono, and I think Stitch were the first companies that actually thought about building these rules for open banking. Right? Somebody's going to build those rules. Unfortunately, it wasn't Okra. But I can promise you that there's another company down the line that's going to build those rules, and it's going to be hugely successful. So we're looking for the next, as Okra fails, or was wound down, we're looking for the next Okra. So I think that's the narrative that we need to push out there. Don't let's paralyze ourselves looking at the bad companies. Don't let's get too excited looking at the good companies, like you're saying, But let's just focus on the fact that there is innovation to be made here. And our role as the owners of that, managers of that capital, is to continue to look for that company that's going to solve that problem.
Fantastic. So I definitely, as someone in the media space, definitely understand and believe in the power of narratives and storytelling for different aims. But I was informed that it's, we're running out of time. So I just want to ask one last final question to all of you, maybe just 60 seconds. And, it's 2 questions, just decide which one you want to answer. So it's just, one key takeaway you want this audience to leave with, or, what you think the most important thing Nigeria needs to do to unlock local capital. So just final takeaway or Nigeria local capital.
Mine is just one sentence. We have a saying in my language: the best hunting is done in a pack or in a group. That's all.
What were the questions again?
One key takeaway, or what does Nigeria need to do to unlock local capital?
I think I'm going to steal from what, I'm sorry, my memory's terrible.
The name is Hertz, like
Hertz.
a car rental company.
Okay. I'm going to steal from what Hertz said. I think that what Nigeria is doing really well in terms of attracting venture capital without really doing much. I think we need to work on a narrative to ensure that there's a more sort of deliberate and intentional narrative about the fact that VC capital in Nigeria they were ready for it. It's a big market, and we have the people that can actually manage that money and ensure that we actually make a success of venture funding in Nigeria, which will be a proxy for the rest of Africa.
So my takeaway would be that, as I said, this is a strategic market for the US government and for the US economy, that we're extremely engaged, that we've just launched this 5-year MOU to bring more US investment and trade into Nigeria. And then also specifically this year, and it's really under what can we do for startups? What do we do for startups? Ambrose, who's sitting in the audience and is on my team, we will be leading a delegation to the US government's investment summit. It's in May this year. I will proudly say, sorry, I'm probably going to go over 60 seconds. Can I have 90 seconds? I will proudly say that 2 years in a row, we led the largest delegation from Africa. We were in the top 10, and we were tied with the UAE, which is quite an impressive feat. And what it does is it tells Nigeria's story. And it's one of the reasons I'm so excited about this, because we get to bring, the last time I took the delegation, it was 60 companies. We had the big names, and we also had incredible startups 2 of them are currently setting up in the US this year. What that does is it gives startups, Nigerian startups that are ready to expand to the US, that are looking for capital, mentorship, partnerships in the US. If you're in that sweet spot, this is an incredible opportunity, and it's something that we're looking to do. But like I said, not only does it expand business, it allows us to tell the real story of Nigeria, the real story of what's happening here, the excitement, the dynamism, the business, and I think that's one of the things that's great. So thank you.
She took my thing, so I'm going to have to come up with another one. But I will give you another one that I've sort of been faffing about with as a concept. I think, and this is more internal in terms of how local capital, at least internally, functions. I think there needs to be a 2-pronged approach. The first one is decoupling how wealth is earned within the holders of local capital and how that wealth is expanded, right? Almost all family offices, I'm sure you guys know this, when you go to try and do something with them, there's an oga patapata that you have to speak to, right? And he's the one that made his money. But if he made his money from oil and gas, it's extremely hard to convince him to invest in agri-tech or something else. Because in his mind, I'm going to bring boats from China, sell them to Mobile, I get this markup. Why are you now telling me about this thing that is going to exit in like 8 years? Will I even be here? I don't even know. Do you know what I mean? But if you decouple the person that made the wealth and the person that makes the strategic decisions to invest that wealth elsewhere, then this person can better advise the person that made the wealth and say, look, you know this, your mobile and everything. No problem. But you know LNG and CNG are also becoming a thing, etc., etc. But there are these guys doing solar, and this solar is even cheaper, blah, blah, blah. How about we get 20% and put it in this solar? It's an easier conversation for them than it is for you to be pitching to this Oga that probably won't even give you the audience, right? So that decoupling of who made the money and who gets to invest it into the future, ideally someone young. Because I'm very surprised that Mr. Bukar has the idea of sort of breaking out, tranching out the pension funds. I expect that from someone that's like 25. It's such a young idea. But so you want someone that you want someone that young to come up with such crazy ideas, right? They will be able to sort of get the local capital into the future. And then the second prong, I'm stealing your 90 seconds. And then the second prong is changing how local capital actually views investment, especially in tech. Predominantly, before, they either viewed it as it's charity, and my son's uncle, somebody starting one technology, something, I don't even understand. Oh, here is 100K, let's see if it works. It's charity, they're supporting the youth. Or it's FOMO. It's, crypto is the new thing, oh wait, let me put some money and see if it will work. And if it doesn't work, I'll never touch tech again. Do you know what I mean? So it's the two, but neither of them are a reason to actually invest. Feelings are not a very good reason to invest, and neither is anxiety and excitement. And so we now need to then change their perception to start looking at these investments as much viable investments as oil and gas, as, you know, telecoms, or all the, I always say Nigeria has 4 professions. They all rotate around banking, oil and gas, healthcare, law, and then you have some other people around it, right? But if we start making them look at these things as viable investment, you know, especially within spaces that are already interested in. I know a startup that is doing robots that clean tanks for oil and gas companies. So if that's the case, find an oil and gas based family office and say, hey, here's a new startup that is within your space of interest, but it's doing it differently. Invest in this one. We need to now make them look at these things internally as actual viable and not just as charity or as formal. I believe that if we do that, we have a much higher chance of unlocking and increasing the involvement of local capital. Thank you.
Thank you. Please join me in giving a round of applause for the panel.